Today, I want to touch on some emerging challenges, and it's been interesting couple of weeks. We have now about 450 of the S&P 500 companies have reported. Sales growth is up about 15%, which is surprising to the upside by about 3.5%, stronger than analysts thought. Earnings are up 7.7%, so a surprise on the upside of about 3.6%. So this is a mix of the world we live in. The Bank of England just announced they're projecting 13 or 15% potential inflation this year and next. Germany and China are seeing increased risks of recession. So there's a lot of mixed signals going on, with some strength in pockets of the economy and in the global economy, some real challenges. Last week on a call we had at ARS, Dr. Ed Yardeni raised the issue of TNAC, which is there's no other alternative country, viewing the U.S. as the safe harbor in the storm right now. Today, I want to touch on three things: the global conditions, and give you a kind of a baseline for where we are. Talk about Fed tightening and how it's led to emerging market crises, but not all of them lead to recessions. And I want to just touch on Latin America, going to the left. As you know, we had a new president in Colombia. It's the first leftist president in Colombia. He is a former guerrilla, and it's a big shift in that country. So I want to talk about some of the changes that are going on there as well. So we'll get through this pretty quickly. So obviously, global growth has been under pressure, whether it was the pandemic, the war in the Ukraine, the supply chain issues, inflation pressures, policy tightening by central banks, the decline in M2 in many nations. All this has led to slower growth, greater concerns about the outlook. And it's not just in the advanced economies or emerging economies, it's everywhere that you're seeing this slowing growth, except for a handful of nations. So after a tough couple of years with a big decline and then a rebound due to excess stimulus put into the system, we're now starting to get back to a more normalized economy without the artificial support of many ways, and that's led to some challenges. You've had headline inflation in the major emerging markets spike up quite a bit. Brazil and Russia obviously have had their big moves, and Russia's seen it come back down again. And quite frankly, they've managed their economy very well during this challenge that they've had since the war started and dealing with the sanctions. India is still facing problems, but clearly, unless you're a commodity producer and exporter of material size, you're feeling the pressures of higher inflation. I think you've also started to see that early, and you started to see that last year, as a lot of the emerging economy central banks started raising rates well in advance of the developed nations. And you saw that there have been over 280 rate increases over the last 18 months. There's been a lot of tightening of financial conditions going on. And even if you add to that in the US, with the strong dollar, Ed Yardeni felt that was a 50 basis point tightening. The strength of the dollar would be effectively a 50 basis point tightening. And then when the Fed has started quantitative tightening, not reinforcing their bond positions, and that every 500 billion of that, the New York Fed believes is another 50 basis points of tightening. So in addition to their rate hikes, you've seen the dollar and quantitative tightening add what's potentially another 100 basis points of tightening conditions. The two outliers for this are Japan and China, who are not seeing big rate increases. But globally, we're going through a period where easy money is gone, and we're moving back to a much tighter system. And when we have tightenings, bad things have happened, particularly when the Fed tightens. You've led to a lot of past crises. And I've showed this chart before. It goes back to Penn Central in the 70s, Franklin National, the silver bubble. Then you have the Drysdale in Mexico, Continental Illinois, and so on. But whenever the Fed tightens, there are problems that come with it, but it doesn't always get reflected in the stock market, which is, as you go back in time, and the argument for staying invested is actually pretty clear from these. When we do have crises, the U.S. attracts a lot of capital, and being a magnet for capital and a safe haven, it does bring money back and help strengthen our markets and our economy throughout. But when the Fed tightens, there have been crises without recessions. And what happened is it typically started with a Fed pivot or a Fed pause of what they were doing in their tightening of conditions. So you can see these are 6 of the last big tightenings that did not lead to recessions, but it leads to a Fed pivot. And that means that's the big question today, that the market's thinking, well, if things get bad, the Fed's going to pull back before they have a chance to tip the economy into recession. I've been in that camp for some time. I'm not so sure that that's going to be the case going forward. I think they may feel the need to really tamp down on inflation if they don't think they have it under control. So they may let rates run a little longer. I do think the market is being too aggressive, thinking they're going to start easing at the first sign of financial challenges here. So I think the market expectations of Fed declines of rates next year are a little premature. I think the economy still has some strength to it. I think the labor report that they gave is another sign that the Fed needs to be vigilant. I think that the concerns that I've expressed the last couple meetings about layoff announcements and hiring freezes are not yet reflected in the numbers and will be reflected in the coming quarters. But right now, you're still getting some of the overheating that the economy's had from the stimulus that's been put in over the last 18 months. But I think that that's going to start to dissipate and will take some pressures off the Fed. But we have to be vigilant here. And I think the Fed, the market's expectations of easing, I think they would likely pause rather than ease this time and let rates run at a little bit higher rate because they need to have the firepower to deal with the next recession. Switching to Latin America and Gustavo Petro becoming the president of Colombia is really kind of fascinating. But there has been a major shift to the left. 5 of the 6 leading economies in Latin America now have left-leaning presidents or leaders. The 6th is Brazil, and that's still an open question how that election plays out this year. But the reasons for it are pretty clear. People have not seen the benefits of the different policies of governments have had in place. They feel the states have not delivered on their commitments and that the benefits of what the policies in place have gone to a handful of the elites and not to the broad public. And in addition to that, you don't have great growth rates. You have high levels of corruption. Inequality is at high levels. The ability to deal with the pandemic was not really there because the health systems were not as strong as they need to be. The educational systems need work too. That's going to make it a challenge for the structural changes that need to be put in place. I think having poor infrastructure, high debt loads, although not as high as countries like Japan and some of the advanced nations, but when you have rising debt loads and your debts are in dollars, that becomes a bigger problem too. And much of their debts are in dollars. So I think there are some challenges there that these new leaders are going to have to think about. What am I going to do and how am I going to solve for this? And I think there's the FT had a very good op-ed, and their advice to Latin American leaders was very straightforward. Don't believe your election was a vote for socialism. It was a vote against the existing incumbent governments. It's a vote for policies that work for the masses, not for the few. And they don't want repeats of these failed programs that they had in the past where the states get involved and take over businesses and things like that. That's not what they're looking for. They're looking for real structural reforms. And to do that, you have to get the broad consensus involved. You can't have divisive policies when you need to pull nations together with limited resources. So what they need to do to be successful is really focus on results, not on ideology. They need to get their workforce educated, motivated, not just for the skills of the past, but for the skills of the 21st century. We need to have 21st century infrastructures so that they can get out of their way. And the good point for these emerging economies and developing nations like Latin America is they can leapfrog some of the mistakes that the advanced nations have made to get there faster. But to do it, you have to have long-term plans. And this is something that I've hit on for the last several weeks now, is policy consistency is absolutely essential in the US. It's essential in any nation because it allows for effective investment, both by businesses and by governments, as well as by households adjusting their spending according to what they believe will be the policies in place for an extended period. When you have herky-jerky policies, it makes it impossible to make effective investments, and you need to do effective investments when resources are so limited. But I think there are big opportunities right now for the Latin American leaders, and that is to take advantage of the shifts that are going on in the global economy today, particularly nearshoring of production back to from China to closer to home. That's going to benefit the US, Mexico, and Canada, and they could be big beneficiaries of taking advantage of the nearshoring. They also have to take advantage of the fact that the US and China are both see them as attractive markets because they have resources and they have demographics in their favor. And if we take advantage of that, that's going to be a big opportunity for these Latin American leaders to become much bigger players in supporting the economies of the US and China. And they don't have to choose one or the other. They can work with both and benefit from both. And lastly, they have to make sure the best talent stays at home and the capital stays at home and doesn't flow out. And to do that, you have to have sensible, structured policies that are going to work for the long term. So I think there are a lot of challenges. I think these leaders need to be clear on what their goals are and what their mission is. And it's not an ideologic one, it's practical things. People want to see higher standards of living. And to do that at a time when you have such great inflationary pressures and such slowing growth is going to require real structural reforms and structural change that's going to have to bring countries together, not divide them more effectively. And it's going to mean that they're going to have to work together in those countries to try and take advantage of the opportunities that they have to strengthen themselves and to move forward at a time that they do have a good opportunity, but the challenges are great. So Mark, I'm going to stop there and open up for comments and discussion.
Great.
Stephen,
Yep.
I've got a question regarding actually something that Bill Deukler had brought up probably 6 weeks ago, maybe 2 months ago, and that is the reverse repos. Is that still going on, and has it increased? What's the status of the reverse repos, and how is that impacting the economy?
I don't have an update on the reverse repos. I don't know if Bill, if you do. I will say before Bill answers, there is something funny going on in the Treasury market. Michael might be able to touch on this a bit, but there's less liquidity in the market these days as the Fed's starting to do what they're doing. And it's creating some challenges in the system now that people are starting to worry about. Are we taking too many bonds out of the system, and are we creating too much illiquidity? And that tends to create strains around the repo market. So I think there's something quirky going on right now, but I don't know if Michael or Bill have more on that. Mark, you're on mute too.
I can add something if you like.
Okay,
on that.
Greg.
And
Go for it, Greg.
so yesterday's reverse repo was roughly around 2.2 trillion. So it's at the peak, very close to the peak of where it's been. So the reverse repo, people have had different interpretations about what it is, right? Is it a form of tightening? Because this was around before the Fed actually started tightening. And the reason that most people explained this existed was because the money market industry would disappear if it didn't, because the money market industry is supposed to be a cash replacement for most people. You know, that's where everybody holds their excess cash balances, funds, companies, etc. And with yields close to zero, plus the expenses that it would cost to run a money market fund, you would essentially get below zero nominal yields, and therefore lose money on your money market operations. So the Fed instituted the reverse repo with a positive rate. And the question is, and I think the answer is, it's become a key monetary policy instrument right now, possibly more important than the Fed funds rate.
So the question I have is, with those reverse repos taking liquidity out of the economy and the increase in interest rates, how is that, again, how's that affecting the economy? I mean, that seems like quite a quite a lot.
Yeah, I mean, it affects financial conditions, but remember in general, the money that gets invested in these money market funds is not money that is destined immediately for productive use or to buy longer term securities. It's cash management
Right.
by whoever needs to cash manage. So, does it decrease? Does it decrease the money multiplier? Possibly.
Yes.
But this is not money that in the short term people are thinking of dedicating to either buying riskier securities or productive uses, unless a company makes a very big decision in terms of new projects and things like that.
I think, Adam, one of the issues that the global economy is facing is global short rates overall are up about 2%. And that's a significant tightening condition in a very short period of time on the system. And I think that's part of what's slowing the global economy down, is that 2% rate increase is material off of such a low level.
Well,
Okay,
other
thanks.
questions, comments, but Adam, I want to rejuvenate our focus on Ukraine, and I'm heading either over there or Poland at the end of the European tour. So I want to get your help from different angles, the intelligence angle, energy transition angles, other angles. Any other questions, comments on what Stephen threw out at us?
I would just add that there's a couple different facilities that affect how much is in reverse repo. One is the Treasury General Account, so that's actually come down from a high of 900 billion in May to about 600 billion now. So that's offsetting the liquidity drain that QT is doing, which is, I think, the major reason that you have more usage of the reverse repo facility. But going forward, we should expect usage of that facility to go down and conditions to tighten as QT goes on.
Thanks, Ed.
And just keep in mind, prior to the financial crisis, money markets basically got 40% of their assets were in commercial paper. And the financial crisis basically wiped out a big chunk of that market for a lot of big corporations. And that's put more strain, more money going into the treasuries as well from the money market area. So it's shifted a lot of the short-term capital around and tightened up the treasury area some too.
Fair enough. Other comments, questions? I have no idea where Rob is. Looks like he's on a train.
It does look like he's on a train.
Yeah, he is on. It's moving pretty fast.
Hey, Mark, I'd like to ask a question. When I read about Latin American capital markets issuance or lending or investments, almost 75, maybe % more is led by multilaterals. So because they have the expectation and the obligation in many regards to support micro borrowers, SMEs. Steve, are you seeing, your comments on Latin America were very interesting to me, but left of leaning, center-led governments, all right, doesn't really matter. But from your pedestal, are you seeing a lot of activity in the capital markets or in the lending arena, or not? I mean, it's dwarfs in comparison to what we read about in the US every day, but it's something that I'm sort of tracking, and 9 times out of 10, it's a multilateral institution is having to do the lending because the private sector institutions just don't have the confidence in the creditworthiness of borrowers.
It's tough. They were taking a lot of money from China for that reason. And China was more than happy to give it to them. But yeah, they have to tap into the IMF on a regular basis and all that, which is not that's a sign of a dearth of investors. So I do think there's challenges of getting consistent capital flows there. And I think a lot of that has to do with the inconsistency of the policies and the rule of law. I think some of the sins of the past of nationalizing foreign companies and all that does pull you back from making those same commitments with the same kind of confidence, and that does push them into more of the multilateral. entities. So
Thank
I
you.
do think there's a challenge there long-term. I think,
one of my
I think
jokes,
there's a
wasn't
big opportunity though, too. And I think that I don't want to lose that part of it. I think that if they can get it right, their demographics and their geographics and their resources can be turned into something really positive if they can get their acts together, but it's too short-term oriented, I think, is the challenge there as well.
Sadly, I think you're right.
Other perspectives?
Dare I ask about tomorrow's CPI numbers? Are we expecting them to be elevated again?
It's interesting, the gasoline's at the pump is going to start trickling in at some point. The expectations on the forward expectations are coming down quite a bit. I'm not sure the short-term numbers are how they're going to play out. It could surprise either way, to be honest with you, the way the numbers are coming out right now. Same thing with the unemployment number on Saturday and Friday was exceptional. I don't know that that's a reflection of the strength of the economy today.
Hey, Steve, can you hear me? It's Rob.
Yes, Rob.
Hey, Rob.
Okay, great. Thanks. Yes, I am on a train and I'm actually heading to Washington DC for a couple of days. I was just curious, you might have talked a little bit about the China and Taiwan and the visit by the speaker to Taiwan. Steve, is it your feeling that these reactions by China are pretty predictable and it's a little bit more short term, or do you see this being a longer scab and a little bit more complications to some of the higher up decisions here and economic decisions?
Really complicated subject. So I think you could argue both ways quite confidently that Pelosi's visit, while well intended, was probably not well timed. The U.S. taking on two big adversaries at once is not a great idea. While we're still fighting a third battle still on terror. And I think we need to really focus on getting the Russian situation resolved first. So we could have put off that visit if it wasn't a midterm coming up. So maybe I'm a little cynical on the real motivation for it, whether it's democracy or the midterms. I think that what China's doing, though, it gave them a perfect opportunity to really flex their muscles and send a message to other nations not to send your leaders there. They don't want people think that you can go there without any consequences for it. So I think they're gonna show their strength the way they are right now, and it's been pretty aggressive what they're doing. But I think the security community thinks they'll pull back after not too long. Xi's got a lot on his plate right now. This helps him with nationalism, helps him with put a show of strength up for their party Congress. But they are showing off their wares. They do have quite an impressive array of equipment these days. I don't think it's going to push them to supporting Russia anymore. I don't think they're going to start giving weapons to Russia or do anything different than they have been. But I think they are sending a message to Asia Pac as to what their feelings are in the South China Sea. So I think they're sending a strong message. I don't know if it accelerates or decelerates their time frame. Who knows on that one? Xi is doing a lot of power consolidation right now. He put another longtime friend in the head of one of his top security areas. So he is setting up for the long term to really hunker down. So once he's in, I think there's a different calculus of how they'll proceed once he's secured president for life for the third term. So it's a tough one, Rob. I think there's real issues coming from that one.
Other comments? Questions?
Greg, do you have a different take on that with what's going on in China and their response?
No. Look, I've been a China follower ever since investing opened up to people like me. And I, from the people that I talk to and who I think really understand China, they always say the same thing. There's about 100 people who know what's going on in China, and it's none of us.
Mm-hmm.
And so I agree 100% with what you said. I think that security designation, which we read about, I guess, today in the West, is important. This is in front of the party Congress for the cementing of a unprecedented third mandate for Xi, with everything that he has enshrined himself as at the same level, or maybe trying to go even higher in the Mao Deng hierarchy there in China. And then on Rob's question on Taiwan, look, I mean, if they didn't react, it would have been a show of weakness from Xi. So we got a reaction. The question is, does this become a longer term blockade, or do you get an accident because people are playing with fire? At the same time, the economy in China is bad. You have longtime proponents of high China growth like Goldman Sachs now saying, maybe 2-3 for the long term. And they're having an implosion in the real estate market, and they're having an implosion because of that in the high yield market. A lot of losses accumulated there. I mean, nobody really knows what's going on. Every now and then we read about a new bank that's being saved. Whether or not they're going to have to do a systemic rescue of the financial system like they did in 1999, 2000, we don't know yet, but they have been setting up asset management companies, which are state sponsored, rather than set them up at the federal level, like they did with the 4 big ones in 1999. They're doing it at the state level. So it's a lot harder to come up with information to see exactly what's being done there. So yeah, it's very, very, very opaque.
Greg, I think the other interesting thing, and I heard this last week, and Kathy from MarketX actually reinforced it, I believe, was that they may continue the lockdowns as part of their social stability and managing their political stability in their country by keeping people locked down for longer and allowing them to really secure their power a little bit more and worry less about economic growth and more about social stability by keeping the lockdowns on of their COVID policy, which is an interesting approach if that's what they're doing. And have you heard anything on that?
I did not hear it in those terms, but look, I wouldn't be surprised. It's an authoritarian government that discovered a new tool.
Yeah.
And therefore, it seems to, in some sense, it seems to have worked for them. So why not?
I think that's the one thing people forget about with China. With 1.4 billion people, social stability is the key to staying in power there. And in almost any political system, the number one goal of a leader is to get reelected or stay in power. So they're going to be very focused on that. And Xi in particular is very focused, as you mentioned, on securing his place in the Mount Rushmore of China.
Yeah, Gregory, I would venture to say that that Xi did not discover this lockdown tool more than they created it, knowing what they could do with it. The same thing as what Putin has been doing in Russia with the COVID tracking system that they have there as well. So discovered the tool or created it.
Yeah, I mean, let me remind everybody, China has social credit scoring systems, right?
That's
where
right.
basically you're being tracked on your social media and other behaviors, and you can get locked out of life if they decide that you've not been a model Chinese citizen. So
They formalized it.
yes.
A comment I'd like to make. I had lunch with the Consul General of Colombia last week, and he's going back to Colombia, being reassigned after the elections. Having said that, the characters, yes, Gustavo Petro is a former guerrilla. He's a very well-educated man. And what I gathered from the Consul General, there seems to be more of a consensus of bringing the country together with Gustavo Petro. That's just a commentary here that I got out of the Consul General. Being that he is leftist, but he's also very well educated. Point is, he's not a bus driver as Nicolas Maduro next door in Venezuela. He's got more sense.
Well, he announced a big program for raising taxes on the wealthy and on their major commodity exporters today. The key target is the top 2%. Anyone making more than $2,300 a month will see a bigger cut in their salaries going to the government. That's one. They're calling it the tax reform for equality and social justice. They're also proposing a wealth tax on savings or property valued at more than $700,000, as well as a 10% windfall tax on exporters of the country's main commodities of oil, gold, and coal. They're going after a whole bunch of things, and it's going to be interesting to see how they balance their leading businesses and taxing them and still moving the country forward. It's always been a challenge for people, and a wealth tax is another one. So
To your point, Stephen, though, on the necessary structural reforms, I mean, they had a well-functioning private pension system, which
Yep.
as part of these packages that you're talking about is going to now probably disappear.
So I wanted to, David Lane just came on. David, I know you're late and you're putting on the spot, but you've been down and throughout Central and South America lately. There was a part of the discussion and the presentation was on the LATAM going left. We were just talking about what's happening with Colombia legislation proposed and some other dynamics. Can you, whether it's with a broad or precise brush, maybe share your thoughts, what you're seeing in the region? You're on mute though. You're still on mute.
Sorry.
There you go.
That's exactly what is happening. There's such people are so upset that the from the middle class to the lower, the things are getting bad for them, and actually not bad, they're getting worse, which each government that passes along. So now they're just as I see it, because I saw it happen in El Salvador. This is a third different party in government in the last 10 years. They're just tired, and anybody can come and promise whatever, and they go left. And the problem with these guys in the left, at least as I see with some like Bolivia, Ecuador, and Colombia, most of these guys are not even prepared to run an office. From what you can see from their experience, their education level, their life experience, their work experience, it's very troubling. And the problem, as I see it, is that the big financial groups end up making ties with these left, propaganda or whatever last minute options for these people. And they get a good deal from the government because the government wants to stay in place and big business wants to stay in business. And things remain the same for the people. So what you're seeing is a lot of people fleeing, capital fleeing, but it's mostly middle upper class. But the top of the people, first of all, they don't have any money in these countries. The money has left many years ago. So, but you're seeing a lot of people being scared because there's nothing is happening. So the social unrest will get worse, because these guys coming into power, people are expecting them to do things. They pass these laws that really have no benefit for the people they're supposed to benefit or they need the benefit. So I don't know, but it doesn't look well, and there's very few countries in Latin America that are stable. Panama has been stable until the last few weeks. And, they've had a lot of blockades in the streets and work stoppage because they want the government to subsidize everything, and you're seeing that through Latin America. So I don't know what the answer is, but what I do know is that there's going to be a lot of opportunity because they're missing everything, more so than before. Because these guys are not prepared to take care of what's coming in as I see it. That's just my opinion from the people that I talk to, the places that I visit. So, but they need a lot of help, and maybe it's a good time to reach out to some of these governments. I mean, I've been trying to reach out to in Colombia, Panama, and El Salvador with low-income housing opportunities, to, if anything, at least help the people and make the government look good, even if they're not doing much. But there's plenty of opportunity. The issue with Latin America is if you hook up with the wrong partner, it could be very, very financially troubling. I mean, and it's very delicate because everybody's a friend. Everybody's friendly. Everybody knows everybody. Everybody can do anything. So it's very delicate, but there's a lot of opportunity coming. That's for sure.
David, do you have a similar view about Honduras? I'm curious because my partners there have a very optimistic view, not just of the stability, but also of the outreach to the lower class, in particular with construction. Obviously, our work in industrial hemp is key to that. So I'm curious if you've had any insight in Honduras. Actually,
in Honduras, I have several contacts, but I have never been able to break in to that market. So I really don't know. I've been proposed by several, at different times, different governments, several proposals for low-income housing to help the poor people, but at least the ones that I was offered to, which was very ambitious, very, very nicely done. At least the work on paper looked well. They didn't go anywhere. So I don't know. I know that there's groups that are trying, but with Honduras, I don't know. But the times that we tried it didn't work.
David, is the corruption so entrenched that even when new governments come in, it's just changing the payee? Or can a new government actually make the reforms that they say they're going to make? With corruption?
To tell you the truth, I don't think the new government can get into government without the corruption help. So they owe favors to be able to lock into these positions, and that's the main issue, right? That they trade favors for whatever, and you have crime, you have drugs, you have human trafficking, you have guns, and in these countries that do not generate any or not many industries, there's a lot of cash, for them, and it's tough for them to say no, especially, these new governments that come from humble beginnings, had little opportunities, and I don't know. I've never been offered anything like that, so I don't know how somebody normal would react against that sort of temptation, but I'm sure it's hard, because that's the bulk of the money. I mean, that's a big chunk of money that flows through there.
David, are you, I would love it if you could, we could do a deep dive just to go into this dynamic and once again, sort of Stephen sort of leads us, thought leader, putting a few slides together that kicked off this discussion. Well, you've been living this dynamic, and maybe there's some challenges and opportunities where we could at least be aware of it. More,
I would like that. I mean,
and more fully, it's one of the set of countries that I've dabbled in, and we've been trying to do this tour of LATAM. So we could collaborate on that.
Yeah, when you want to go there, Mark, I'd be very curious and very happy to participate in that. We've got some colleagues. I wanted to ask, has anyone heard from Greg Vernon lately in Colombia? Anyone know Greg? Yeah, he'd be a good person to talk to and see how the ground is, shaping up for the cannabis trade there, which seems to be one of the more promising fields. But
Yes.
Yeah, but by going back to Europe, we're refreshing, reconnecting all kinds of relationships. So same with what we can do with LATAM, and we need your stewardship.
I will be more than happy to participate. I've been trying to help because I see the need, not just the opportunity, but I see the need, and I wanted to help at several points in my life, and it's been difficult.
We've been touching, there are pockets like, I don't want to belabor it. Let's do that. Like, that's our takeaway. Well, thank you, Stephen.
Go-
again for, I mean, you've been, calling it like you see it. It's even when you called inflation not exactly transitory, but it was peaking. But here you're ahead of the game again, at least for, and let's hope we'll follow through on some of these subjects. And again, just in general, Wednesdays, 10:30, we come back together and we try to, whether we breakouts or if it's a specific event, then we'll try to set up a cadence of calls just to build up to those events like we're doing in Michigan.